when you think about Bitcoin as a triple point asset and you think about the ability to time lock that triple point asset, I think Bitcoin becomes the first quantum asset that you can send that asset through time and it becomes completely unadulterated when it arrives. There's so many things that Bitcoin just breaks, and our fundamental understanding of finance is one of them. If I look at what's the best form of collateral on earth right now, not many people believe this, not many people understand it, but it's Bitcoin. There's no better form of collateral than that. And when the finance world figures that out, then that's when we're going to have huge demand for it.
Introducing the Blockware Marketplace. Start mining Bitcoin today. This has the potential to transform the mining industry, as now anyone can buy a Bitcoin ASIC using on-chain or Lightning, see its historical and live hash rate before purchasing, and be earning Bitcoin mining rewards in minutes. This brings transparency and turnkey mining to a whole other level. Start mining Bitcoin today at marketplace.blockwaresolutions.com. Hey everybody, welcome back to the Blockware Intelligence Podcast. This week I have on back again Peter Dunworth. Peter, welcome.
Hi Joe, nice to see you.
Great to see you as well. This is your part two, so excited to bring you back on. In the last episode, I know we covered, Bitcoin as this triple point asset. If people didn't already listen to that, what is that idea? Why is Bitcoin a triple point asset, and what does that mean?
So the triple point asset refers to Bitcoin having a number of tech innovations, which means it is all three functions of money at the same time. So just thinking about those tech innovations that I think are unique to Bitcoin, which kind of get overlooked in our rush to look at the monetary functions of Bitcoin. The tech innovations are absolute digital scarcity, which is a completely new function of money. We've got seizure resistant asset, which is completely new. We have censorship resistant money, which is a new innovation. And then the mother of all inventions, which we've never seen before in our entire human history, is an immutable ledger supply and issuance. So it's fundamentally a new form or an improved form of accounting. And so when you apply those innovations of tech to the function of money or the three functions of money, you end up with an improvement in a store of value. So typically that's been gold. You now have a better gold than gold because you can add, effectively, it now becomes digital gold, but you also have the effect that it's absolute digital scarcity, which is better than a 2% inflation rate. And you also have the fact that it's seizure resistant. So that's a big improvement on store of value. Medium of exchange, you've got an immutable supply and issuance, so you know exactly how much is coming out, which is better than, say, our standard or global reserve currency at the moment, which is the US dollar. That has an issuance that we're not sure of. In the last 3 years, we've seen a 40 or 50% increase in supply, and now we're seeing a decrease in supply if you look at the last 12 months. And we really don't know what the future holds with that supply and issuance, but Bitcoin has a certifiable supply and issuance into the future, an immutable supply and issuance. So you can't change that. So that's a better way of building on that because it represents a more secure future to build on. When you couple that with the fact that it's also censorship resistant, that improves the functioning of a medium of exchange. So I think Bitcoin, although at the moment it's objectively not better than the US dollar because the US dollar is an 80 to $100 trillion market cap, in time I think people will understand that this is a much better form of medium of exchange than what we're currently using. And then the granddaddy of them all is the unit of account. We have an immutable ledger, which this is the first time in history we've seen that, and it's fundamentally the first accounting upgrade that we've had to our accounting system since the Renaissance. So in 500 years, this is the first accounting upgrade that we've had, and it basically creates a better unit of account that forms an immutable supply. So all of those three things conspire to create the first triple point asset, where for the first time in history we've got one asset that's the best at each of the functions of money. So we have this weird equilibrium where all three functions of money are going to be competing for the use of Bitcoin. And this is something that's never happened before. So I guess that's a setup to or the backlog to our previous conversation.
Yeah, 100%. I definitely think that was a fantastic summary of our last conversation, and definitely want to get into some new stuff this time around. So you have this idea, or this you know a lot about this idea of time locking Bitcoin. What is time locking Bitcoin for the audience that's never heard of that?
It's really quite simply you have the ability to time lock your Bitcoin into the future. So what that means is I guess the simplest way to put it on is if you think about the real world application of what that is if you put money in a safe at home, you can open that safe whenever you wish, unless you have a time lock function on it where you put money in a safe and you might have a 24-hour function that once you enter the code, that door won't open for 24 hours. So the same principle applies to Bitcoin in that you can effectively time lock your Bitcoin that it won't be available for access until it reaches a certain block height or point in time in the future. So it sounds like such a simple concept and it seems so benign, but I think the implications of this are going to be enormous when I look at, the functioning finance and credit markets that once this gets integrated, there are some really big applications to that. So yeah,
Nice, yeah, very interesting. I guess does this, have implications for like security? Like, is it better than securing Bitcoin, with a traditional hardware wallet? Or like, how do you think about, securing Bitcoin with time locks, securing Bitcoin with multi-sig, and securing Bitcoin with, single sig?
that is a really good question because this is something that I think has huge applications for the security of your Bitcoin. And, you know, time locking Bitcoin allows you to effectively put that Bitcoin on ice. It's the coldest form of cold storage because even if you have your private keys, you can't move that Bitcoin. It's suspended in like a superposition state. If you think about quantum computing, it's not in the zero, it's not in the one, it's in this mixed state in the middle that it's neither here nor there. And this is where the implications for the security of your Bitcoin, I think, have huge implications. And it's not a perfect solution at the moment because it doesn't really work with a multi-sig, although there's upgrades to the network that will allow you to do that. But from a single sig perspective, it affords a host of opportunities to protect your Bitcoin from a number of attack vectors, which I'm really curious to explore. And one of the conversations I've had recently, and a shout out to Knut for this, who came up with this in talking with him. He talks about Bitcoin being element zero, and when I talked about the time locking term, he said, "Oh, Peter, this is really interesting. Listen to this for an idea. We have element zero being Bitcoin at absolute zero. The coldest temperature in the universe is negative 273 degrees. And because, Bitcoin, when you do time lock it, it is effectively the coldest form of cold storage that you can have. There's no amount of work you can do to unlock that time lock until it reaches the block height or the point in time in the future, even if you have the private keys. So it represents potentially, it gives you great protection from, I think, a number of potential attack vectors. And if we go through that, um, the first one that I think it gives you protection from is it gives you protection from potentially the breaking of the SHA-256 algorithm. So how does it do that? If you understand how time locking works is you basically send Bitcoin from this wallet to that wallet. And once you've sent it, it doesn't arrive in this wallet until that time expires. So it's in this weird position that it's in neither wallet at the same time. And so if you think about what happens if SHA-256 is broken, well, probably the first two wallets that are going to get, basically, emptied are going to be the Coinbase wallet with a couple of million Bitcoin in it, and then Satoshi's wallet with a million Bitcoin in it. Now, those wallets can only be emptied because there are Bitcoins sitting in the wallet at that block height. Now, if you have those Bitcoins time locked, they're not actually sitting in a wallet. So you can't actually take those Bitcoins out of the wallet, which is a really interesting security workaround. Like all of a sudden, there's nothing in that wallet until that block height gets reached. So they can't actually take that even if they break SHA-256. Now, I'm sure I'm missing a whole lot of other, technical subtleties, but from a very novice view of what some of the implications of this time locking is, I think that improves the security because you can't, if for whatever reason, say a quantum computer comes along and can basically break SHA-256, or someone can solve for SHA-256, those Bitcoins sitting in a wallet are going to be taken first up. But if they're not in the wallet, then they can't be taken. You've got to actually hit that block height, and that gives you some time to create a defense for that or a workaround.
Interesting. Yeah. You mentioned the idea earlier of duration risk. Is, time locking Bitcoin a potential solution for this idea of duration risk?
I think duration risk is probably the biggest financial problem that we have at the moment. And if we look at how we break down what duration risk looks like, well, I think it fundamentally comes in three forms. You've got interest rate risk. So we've seen in the last 12 to 18 months, interest rates move from 0.25 to 5%. That has caused economic shockwaves across the US banking sector and the global banking sector. So that's a huge concern. That's the first duration risk, is interest rate over time. And I won't go into the technicalities of what that looks for, the yield curves in the future, but it looks bad. The second one is inflation rate risk. We were told that inflation was transitory by the Federal Reserve, and now all of a sudden it's not so transitory, and now it is and it isn't, and there's a flip-flop between what it is and what it isn't. And this is where inflation rate risk, I think, out into the future is concerning, because we don't really have a clear understanding of what that is, and it literally changes by the minute. It also doesn't help that we don't have a really firm understanding of how to calculate inflation, and that definition of inflation gets changed quite often. The third and final one is an exchange rate risk. For those living in the US, it's not really a big deal because the world works on a US currency, but for the rest of the world, the remaining 7.5 billion people on Earth, exchange rate risk represents a real problem, because the world uses a US reserve currency, which is a good thing, because the US has basically been the US dollar hegemony. It's been the most stable currency. It's been the best form of currency that we've seen, and I think as much heat as the Federal Reserve gets for being, I guess, potentially irresponsible with the printing of money, over the last 100 years, I think the US has been a very good custodian of that global reserve status and has done a great job with it. Now, the exchange rate risk, though, is another duration risk. You don't know what the exchange rates are going to be over time. And if you look at probably the most egregious examples of, a degradation of exchange currency or exchange rates, just have a look at the Venezuelan bolivar or the Argentinian peso, whatever they're using there. It's been just a dramatic drop relative to the US dollar. So how do you account for that? It effectively, you've got a price volatility into the future. And this is where I think the ability to time lock a Bitcoin and attach that to a financial contract has the ability to solve, in some part, or go a long way to solving the duration risk problem by effectively pricing that volatility in Bitcoin as a form of collateral to a financial contract.
Interesting. Can you kind of dive deeper in on that note of, okay, so I time lock Bitcoin, 20 years in the future, and then I use it as collateral. What does that mean, and like what are really the implications for that?
So in the bond markets, I think I'll probably talk about maybe two examples that I think I can't believe they got these bonds away. Um, Doing a little bit of background on this, there was in I think it was June or July 1993, Disney announced a 100-year bond. So they were paying roughly 7% or something like that. They had the option to buy it back, but they were basically issuing a 100-year bond. And in more recent times, we've seen the Austrian government, I think they got away maybe 300, well, just under, well, less than $1 billion worth of bonds at a 100-year duration. And they were paying 0.88%, I think. So less than 1% for access to $300 million for 100 years. And we've now seen inflation rates, that are realistically 10%. And I look at this and I think, the governments around the world are going to have huge issues issuing bonds with nothing backing them. And so there's a lot of talk in gold circles that you think, a way to solve this problem and a way to increase confidence for the bond purchases. I might just take a step back there. On those bond purchases, globally, everyone has tapped out, fundamentally.
Mm-hmm.
You've no longer got a market for people wanting to buy bonds. The world's largest bond purchasers have been the Chinese and Japanese governments, and they've turned around and they're trying to basically lower their allocation. They're not buying bonds anymore. So we've kind of run out of purchases for these bonds, but that's going to fall to, as a responsibility, the Federal Reserve. They're going to basically buy those bonds, much like the Bank of England did when they were raising war bonds in, for World War One. They basically said that the public stepped in and bought them all. That just wasn't true. The Bank of England ended up buying more than half of the bonds, and they just didn't tell anyone because they didn't want to create panic in the banking system. That's probably going to happen at this point in time in the future, in the very near future, where the Federal Reserve will be forced to buy those bonds because they're the buyer of last resort. There's no one else to buy it. And what is a way to potentially build confidence, and a lot of the gold bugs have talked about this, is backing maybe somewhere between, say, 5% of the bond issuance with actual gold. And so if they're selling $100 billion worth of bonds, they'll buy $5 billion worth of gold, and they will index that to deliver not only the money back to them on the expiry along with the coupon from the bond, but they'll also deliver them the 5% of today's value in gold at the expiration of the contract. And I look at that and I think, well, that's one way to inspire people to buy long-term bonds from the government. Although I think most Bitcoiners would agree we'd have a hard time trusting the government to deliver gold in 100 years' time, and we're not buying that. But maybe it delivers some form of benefit or confidence to the institutional market to buy that. But if they're going to secure that with gold, much to your point on our last conversation, the fact that there's more gold produced this year than there was in existence in the year 1800, all of a sudden, the fact that it's backed by gold is really not a great deal. What happens if they start backing that bond with Bitcoin and they buy 5% in Bitcoin? And I look at this, and this is where it gets really interesting from two perspectives, is that all of a sudden there is a huge market for Bitcoin and supply to be taken off the market. Secondly, that takes that market, that Bitcoin off the market for a potential period of time. So if they're issuing a 30-year bond or a 100-year bond, they can effectively time lock that Bitcoin to arrive in that wallet in 30 years' time or 100 years' time. So the person purchasing that bond will have 100% security that the government has that Bitcoin and has sent that Bitcoin to the wallet in the future. So there is a huge reduction in risk. You've effectively nullified any concern you've got about the government going broke because they've effectively bought it and paid for it and sent it. It just hasn't arrived in the future. And this is an interesting application that no other asset can deliver. And this is why I call Bitcoin, when you think about Bitcoin as a triple point asset and you think about the ability to time lock that triple point asset, I think Bitcoin becomes the first quantum asset that you can send that asset through time and it becomes completely unadulterated when it arrives. You've got no attenuation, no inflation, no disinflation, no deflation. All of a sudden, you have got the exact asset that you sent through into the future. And personally, I'm speculating, and I think you are too, that network only grows and continues to get bigger. So not only do you have the assurance that you've got, say, one of the 21 million Bitcoin network that represents one of 21 million, you and I believe that at some point in time, the rest of the financial system will start adopting more and more so that Bitcoin network. So that network itself will actually get a lot bigger too.
Yeah, it's very interesting to think about this because, like you said, it's very difficult or it's hard to comprehend that governments and corporations are borrowing money and not promising to pay it back. 100 years in the future. That's pretty out there. But when you put, Bitcoin, you incorporate Bitcoin into this, and you time lock Bitcoin 100 years in the future, it's very reasonable to think that 100 years in the future, if we're right about Bitcoin, it's going to be significantly more valuable than it is today. So, like, are you trying to say that it's like going to be a way to deposit value or wealth into the future, use that future wealth as collateral, and then borrow against that future wealth today? Is that kind of how you're thinking about it, or am I off there?
No, I think it can be used for that. I just don't think our financial structures are set up for that. And this is where I find it like a really interesting thought about this is that if you think that Bitcoin is going to be around into the future, and personally, I don't know any other digital structure that has more chance of success of surviving the next 1,000 years than Bitcoin. I think it's got more chance of surviving than the actual internet, which sounds counterintuitive, but fundamentally it relies on it, so it will actually keep the internet alive. Um, it, one thing, if you understand that premise that Bitcoin's probably has the greatest chance of succeeding and surviving over the next 1,000 years, the next thing to think about is what does this do for finance? And you think about a short-dated bond, and this is one of the issues that I've struggled with trying to understand how time locking would be used long term. You know, if you believe that first premise that Bitcoin will be around forever, and effectively it does go up, forever, Laura, then all of a sudden that creates a potential paradigm shift for finance. It's an event horizon in finance. It's the singularity in economics that we will have effectively an inverted yield curve. If we're talking and thinking about that Bitcoin as collateral for bonds, think about having a short dated bond. You would have effectively one, say a 1 year bond for $1 million. You might put up 2 Bitcoin as collateral for that bond because it's going to expire in 12 months' time. 1 Bitcoin's roughly 25,000. We need two of those to create a 5% interest rate. So ipso facto, we've got basically 2 Bitcoins in there. But if those assumptions that I made previously are correct, then it's a paradigm shift for finance because the longer the duration bond, the less Bitcoin you would want to put up as collateral because the value of it in the future would be substantially higher. So this is the thing that I struggle to get my head around, that all of a sudden we're going to have an inverted yield curve into perpetuity for the collateral that goes into the bonds, if that is the case. So it's just an interesting thought to think about that that could happen, and this is where it does not happen in traditional finance right now. You have, how you rate interest rates, how you rate, the value of a bond and things like that is you look at basically how much risk you're taking. And that's why at the moment we're in a very odd economic situation in that we've got longer term bonds, say the 10-year bonds are trading at a much lower yield than the short term bonds, the bonds rolling over in the next month, 2 month, whatever, the current cash rate. And what that implies is, or why that's such an anomaly is because the longer out into the future you go, the more risk you're actually taking. And this is where traditional finance, it makes it easy. The longer the duration, the more risk you've got to take because the future is uncertain, and the more interest you need to be paid to cover that risk that you're taking. And this is where that sort of thought or concept that we just discussed on the Bitcoin as collateral, the longer the duration, the less risk is involved. All of a sudden, that's just an interesting thought for me to think about, that this could literally be an event horizon for finance.
Yeah, it's very interesting to try to wrap your head around this idea. So I guess it's like saying the idea of, okay, I can deposit 1 Bitcoin significantly far out into the future. I can borrow against it at a, significantly higher dollar value than it's trading at today. Yeah, I mean, I'm just trying to think about it. It's kind of fascinating.
It's something I haven't wrapped my head around, but I think the implications of it are, you know, significant. And there's a lot of things about Bitcoin that I think ends up breaking down traditional financial norms. One of them, and this is a little bit off topic, but I think about Bitcoin and credit, borrowing on your Bitcoin. If you look at traditional borrowing on your Bitcoin, I might just talk about that. Depending on how you do it, you can borrow money on your Bitcoin from anywhere from 12% or 14% right the way down to effectively 0%. And what you're doing is you're making a whole host of trade-offs along the way. With the 12% interest rate, your Bitcoins are not being rehypothecated. They're not being, lent out to short sellers to basically bet against your position and try and, effectively close your loan out because you don't have enough collateral. And then you've got other providers that will give you a 0% interest loan if you put up or borrow less than 15% of the total value of the collateral that you're putting up. And a really interesting thought experiment that I think about is that, and this is something that we're trying to plan for families into the future, is that we think that Bitcoin is going to go up dramatically. We think Bitcoin is the pristine collateral. There's no other collateral that comes close to Bitcoin on Earth. You know, residential properties in Australia are the biggest form of collateral that we have. You know, commercial office in the US is a big form of collateral. Multifamily is another huge real estate asset class in the US. Industrial, it doesn't matter. There's no form of better collateral than Bitcoin for a whole host of reasons. That's probably a whole nother pod. But the the thing about borrowing and putting Bitcoin up as collateral, I think will happen in the next 10 years. And how we're framing this for clients is that in the next 10 years, we believe that you'll be able to go to any bank on earth and you'll be able to put up a Bitcoin and borrow money from them. And if you borrow a low enough amount, maybe less than 15%, rather than having a 0% interest loan, they will actually pay you to take money from them, which is a strange thought. But if you look at how if you look at post-GFC, there are a whole host of problems that the GFC created. The Basel Accords were a set of banking rules and regulations that were meant to be implemented across the global banking system. That was meant to talk about capital reserves and requirements that you needed for effectively lending money out, and you needed to have a certain amount of capital to do that. And when it came to home loans and things like that, you were required to have a 5% capital base to lend out $100. So for a $100 loan, you needed to have $5. And so if we fast forward 10 years and Bitcoin's at 10 million bucks a coin, it also poses the other problem, and that sort of, this is a bit of a sidetrack, but it poses the question, is Bitcoin a currency or is it property? If you listen to Bukele, he tells you it's a currency. If you listen to Saylor, he tells you it's property. I think it's going to be whatever you want it to be. And I think the banking system is going to want it to be a currency, because if it's a currency, they can put that on their account and it's their asset. If it's a property, they can't put that on their balance sheet. That's an obligation that they have to deliver to someone else. So if it's a currency, they get to put it on their balance sheet. And how that works in real world, you'd give the bank $10 million worth of Bitcoin. They would effectively be allowed to leverage that 20x to make loans. So they could make $200 million in loans with the $10 million you give them. And so if you're borrowing only $1 million from that $10 million Bitcoin, they'll probably end up paying you $50,000 to $100,000 a year to borrow money from it.
Yeah, it's fascinating to think about this. So you're basically saying that Bitcoin will be used as collateral at banks, and it's not like the banks are borrowing the money from somewhere. They're effectively creating the dollars out of thin air, because that's kind of how banks work. They just lend credit into existence. And now that we have Bitcoin, this very unique triple point asset that you pointed out, as this like incredible collateral that we haven't discovered. It's like unlike real estate, it's unlike equities, it's unlike government bonds, treasuries. Now that we have this great collateral, it basically like supercharges the banking system to like suck all this Bitcoin in, to time deposit or time lock it out way into the future, and then just bring a ton of fiat into the system, basically. Do I have that right? Or
Yeah, it does. And there are going to be problems with that, and a lot of people won't be happy about that. But the upside of that is that it will mean that there'll be functioning credit markets on Bitcoin. And this is a step phase change that long term, I don't think, there'll always be credit, but it will look very different to what it is now. But this is applying our current system to a potential new technology in Bitcoin that I think will improve outcomes dramatically. And this is where, from an advice perspective and how we think about structuring clients to take advantage of that into the future, there are sort of certain legal entities that you can set up now to make sure you're best positioned if you're a long-term holder of Bitcoin to take advantage of that type scenario that I think is coming down the road. And this is where, if I look at what's available in the world of credit with Bitcoin at the moment, and I'll just sort of take the opportunity to say this is not financial advice. Every Bitcoiner listening to this, you do not listen to me for this advice on this, but having been a keen observer of the credit markets in Bitcoin, I've watched the best lending products I've seen in Bitcoin have charged 12 to 14% interest. And if I was going to do a loan, that is the type of loan I would personally do. And then you go right the way down to loans on Bitcoin that have 0% interest. So directionally, that thought where people are going to pay you to borrow money from them, I believe is already proven out. We just don't have a bank effectively lending on Bitcoin yet. The second that happens, then what I've just told you will actually come to effect.
Can you, so yeah, this is such like a weird concept to wrap your head around. Can you like dive a little bit deeper on that idea of how a bank or someone would pay you money or pay you like a negative interest rate, I guess, to for you to deposit their Bitcoin? Like I get the idea that banks need really great collateral to basically create money or issue credit into the system. And I get that, like, right now in the US and probably Australia and the rest of the world, that real estate and land is probably like, one of the most common collateral
Mm.
bases that credit is created from. But I have a difficult time right now understanding how Bitcoin, I get how it's like the best collateral, but how could the, I guess, yield curve potentially go negative to where the bank would end up paying you to
Borrow money from them?
yeah, exactly.
Hey everyone, this week I want to talk about Stampseed. This is very cool metal plate where you can literally stamp your Bitcoin seed phrase with this hammer that they sell you into this metal plate. This is a must have for all Bitcoin holders. If you have taken self custody of your Bitcoin, you want to make sure you've recorded your seed phrase on something that is fireproof, waterproof, and time resistant. This is a great product for Bitcoiners who have taken self custody and want that extra level of security and resiliency to store their Bitcoin. So if you are interested in this product, definitely check out stampseed.com. Use code Blockware15 for 15% off the entire website. This expires at the end of May, so go to stampseed.com today.
It doesn't make any sense, does it? That's the beautiful thing. There's so many things that Bitcoin just breaks, and our fundamental understanding of finance is one of them. And so let me set the premise for this.
Mhm.
There is the choice between making it a property or a currency. I'm going to err on the fact, or I'm going to bet on the fact that the banks are going to act in their best interests and say that it's a currency rather than a property. So Bukele wins round one of this.
Okay.
If they say that, then what would happen is when you deposit your Bitcoin into the bank, that is no longer your asset. That is the bank's asset, and they have an obligation, a liability to you to give you that Bitcoin back. Now, I don't know anyone who would be willing to do that in the near future based on what we've seen with Celsius and BlockFi in the last 12 to 18 months blowing up. It has diminished our trust in that system dramatically. However, if you don't want to sell your Bitcoin and you want to borrow some money on your Bitcoin to make a real world purchase of something, it might be a home, it might be a car, it might be paying off school debt, whatever it might be, you would literally take your Bitcoin to the bank and give that to them. They will take that Bitcoin, put that on their balance sheet. Let's just say it's a $10 million Bitcoin. 10
When
years,
you
$10
say
million.
when you say $10 million Bitcoin, you mean $10 million Bitcoin today in today's terms or like future terms?
Let's just say in 10 years it's worth 10 million and we give
Okay.
them a Bitcoin. So one
Got
Bitcoin's 10 million just for nice round numbers. We say we want to go and borrow $2 million from you. Or let's make it nice and simple. We're going to borrow $1 million on that $10 million Bitcoin that we've given you. They
Yeah.
say, no
So
worries.
so so I'm real quick so I understand. So I'm depositing Bitcoin at a bank. I'm
Yep.
time locking Bitcoin at the bank sometime in the future where that one Bitcoin we all expect to be worth about $10 million.
Well, let's just say we're in the future. So forget the time locking for a second, and
Okay.
this is just on the banking,
Okay.
how they will pay us to borrow money, which is
Got it.
a slightly different thought. If we're in the future, 10 years from now, and it's $10 million a coin, you give your Bitcoin to the bank, they take that as collateral and say, thank you very much. Here's $1 million loan. Um,
Right.
we're going to pay you $50,000 or $100,000 a year to borrow that $1 million from us, but we're going to hold your collateral as security. And with that $10 million collateral, they can then 20x the lending on that. So they can then lend out based on, the Basel III Accords, they can lend out $200 million against your $10 million Bitcoin. So they're now making 1 or 2% on the 200 million. They're making somewhere between $2 and $4 million. It makes sense for them to pay you $100,000 a year for access to that capital.
Okay, so you're saying that they're paying me, but then they're lending money to other people at an actual positive interest rate
Yep.
because
By
they're
creating
using,
feed out of thin air.
gotcha, because they're more risky borrowers, potentially using other assets as collateral or no assets as collateral. That's kind of the idea.
Correct.
Hmm.
Correct. And this is where, we have, I think, a collateral problem at the moment. You look at what's happening in the SOFR markets. They've basically stopped taking any European bonds as collateral for that in that market. So I think that poses a huge sentiment shift. And if I look at what's the best form of collateral on earth right now, um, not many people believe this, not many people understand it, but it's Bitcoin. There's no better form of collateral than that. And when the finance world figures that out, then that's when we're going to have huge demand for it. And that will basically back end, I would have thought, a whole lot of financial contracts. And this is where, um, back to the thought on time locking, um, the collateral, if you time lock Bitcoin, then you can effectively reduce the risk, the counterparty risk that you have in trading a contract. It effectively removes the counterparty risk that you hold with that person, which I think is the largest form of risk in the market right now, is that no one really understands how risky things are. And our previous conversation, we talked about the risks in stocks, bonds, properties, and commodities. And fundamentally, there is, I think, a weakness in our banking system that, despite the fact that Janet Yellen says I say and I'm adopting the US because it is the global reserve banking system. Janet Yellen's telling us how sound the US banking system is, which terrifies me because the second they start having to tell you that it's sound, there's some real problems under the hood. And this is where there's a huge issue with collateral. We've seen what's happened with Silicon Valley, Silvergate, and the other banks that have fallen over. They've not managed their risk properly, and they've effectively bought and put a risk-free asset, being the 10-year US Treasury, on their balance sheet, and they haven't marked to market. All of a sudden, this is a big problem. Counterparty risk cannot be, understated, and this is where the time locking of a Bitcoin for the term of a contract, I think, can go a huge way to restoring trust in the system and avoiding counterparty risk.
Yeah, I mean it's so fascinating. So I guess like going back to that idea of depositing Bitcoin, borrowing against it, it kind of becomes like some sort of black hole, like in the banking system. I feel like where everyone is so highly incentivized to buy Bitcoin, then deposit at a bank, and then to borrow dollars from that. Like, would that lead to like an inflationary event to some extent, or how do you see that playing out?
I think it could be one of the catalysts for, hyper Bitcoinization, or that stock to FOMO that, Wicked Smart talks about. I think that's absolutely one of the catalysts. The second, credit markets understand the fact that Bitcoin is pristine collateral, it can do things that no other asset can do. If I told you that, Bitcoin can, Bitcoin and time locking and turning Bitcoin into a quantum asset can solve counterparty risk, well, outside of duration risk, they're the two biggest concerns that we've got in the market right now. And this is, from an advice perspective, this is why we personally don't advise on any derivatives. If anyone's got leverage, if we're talking to funds who have got leverage, they've got um, derivative exposure, we don't want to have that because the derivatives market is the biggest market on earth, and it's just a black box. There's no way of understanding what the counterparty risks are in that market. There's no there's no register, there's no ledger that you can rely on. And this is where Bitcoin, being a triple point ledger, um, open to anyone who's on the network, all of a sudden, when you can time lock that and you can see every obligation on the network, it creates a level of trust that we just haven't seen. And this is where, um, back to that conversation around the credit markets could be the thing that leads to hyper Bitcoinization, because that creates effectively a virtuous circle. Now, that will create an inflationary event that will no doubt lead to a catastrophic, collapse, and then there'll be a reset, and then that will happen again. So I don't think those cycles of up and down that Bitcoin goes through are going to be solved by this, where it just achieves escape velocity and goes out. But I think it just uses that steady log curve to march ahead.
Yeah, it's interesting. Talking to people about that idea of using Bitcoin as collateral and creating credit off of it, I guess like have you had I don't I'm sure you've talked to this other people about this concept. Have you had pushback, and like what pushback have you had? Like what, because it sounds crazy. I mean, it basically sounds like Bitcoin is this super collateral, which I agree with, that eventually the banking system will, embrace, maybe not anytime soon, maybe 10, 20, 30 years from now. And it's kind of just going to be this like black hole collateral that creates a ton of credit. What pushback have you gotten from this concept?
Um, the first pushback is it defies the laws of physics when it comes to finance, and the laws of physics being, um, the first law of physics is that if you borrow money, there is a cost to it. People don't pay you to borrow money. That's the first and fundamental sort of mental hurdle to overcome. But when you put that into context, that $10 million Bitcoin allows them to lend out 200 million and allows them to generate a $2 million profit on that Bitcoin that they've lent you money on, then it makes perfect sense to understand that they would effectively give you a revenue share of that profit that they're making. Um, that's the first one. The second one is, people are thinking beyond the system, and I look at the best thinkers in the space. I think, one of my all-time favourites, who have enormous respect for, who I think is the most enlightened of us, is Jeff Booth, and he talks about trying to value a system from within a system. It's not possible, and I agree with him. I think he's correct. We're going to have these things, that concepts that we're talking about today are, whether it's 10, 20, 30, or 50 years into the future, are going to seem so trivial and frivolous. But we're in the system at the moment, and we need to make our way through to what he envisages as the future. And the only way to do that is to use what we've got at the moment and create the world that we want to get to. And how do we build a bridge to that? Well, in some way, shape, or form, we need to use what we've got to get there. Otherwise, we just stand still. So that's probably another pushback. And then the third major pushback on that is that most people are thinking from that enlightened point where Jeff is, where it's like there's going to be no credit in the future because there's no money, and that's true too. But there's a long way between here and there. So this is an evolution of a system. You don't just turn in. You don't evolve from a salamander to a human. There's a lot of iteration that goes on in order to get there, and this is where they're the steps that I see happening that are going to take us closer to the point that Jeff envisages.
Yeah, I mean, this is a pretty mind-blowing conversation. So going back to time locking specifically, what risk do you see with time locking?
Well, I think there are sort of a number of risks. We've got the fact that multi-sig isn't really functional yet on it. To me, represents a huge issue. I personally use multi-sig. I think multi-sig in the form of a collaborative custody arrangement is the best form of securing your Bitcoin. And I don't plan on telling any Bitcoiner what to do with their Bitcoin setup, but for me, that works the best that I've seen, and it gives multiple redundancies. The fact that it's not yet functional, time locking for multi-sig vaults, I think represents a potential problem, because if you're sending Bitcoin into the future, you want to have multiple redundancies, and you don't want to be dependent on a single sig hardware device. That to me sounds terrifying. The second thing is, what happens if your wallet is compromised? That's a big deal. Trying to protect your Bitcoin for a period of time is a tough thing. And when it's not time locked, you have the ability to basically move that Bitcoin at any point in time. It might be in cold storage, but within a matter of, hours or days, you can move that Bitcoin from a cold storage wallet to a new wallet that you've completely spun up in a 5-minute process. Now, if you've time locked that Bitcoin, you're assuming that you can keep that 24 seed word phrase secure for the period of time that you've locked it up for. Now, the exception to that is the conversation you had with Michael, where he sent his Bitcoin through to the future, and rather than trying to keep his 24 words private or his private key private, um, he's handed the private key to the world. So everyone has that private key. Now, that's a very, very, very unique situation that I don't envisage many people wanting to do. And who knows, maybe they will, because it's the ultimate form of altruism, but that represents, I think, a risk. If we get back to, what are the risks? Well, keeping your seed words secure or your private key secure for an extended period of time that is longer than the time lock period, that represents a real risk. And then the other thing is, and this comes back to, I guess, human emotion, that, we've all experienced at some point in time buyer's remorse. And it's a psychological phenomenon of, buying something and then being remorseful that you've bought it. You're like, I didn't really need it or want it. And what happens when you send Bitcoin, say, 10 years into the future, and, the second you press send, you get buyer's remorse. You can't unwind that transaction. And this is, one of the really, well, there are two types of time locks. There are time locks you can unwind the transaction, and then there are time locks you can't. I'm talking about the ones that you can't because, they're basically as good as a ledger entry in the blockchain. So I look at that and I think, well, how do you unwind that? You can't. So you might have buyer's remorse. And this is where, time locking is, I think, a really interesting financial concept to think about. It has potential to solve a number of issues that we've got. I think we're really early days, and I'm just really fortunate that we get to have this conversation and bring awareness to it, because I think there's a host of benefits to it. There's also a host of limitations that I'm not aware of. Well, I think I've mentioned a few of them, but I'd just like to see this discussed more, because I see the implications of it being quite huge. Because I look at the use cases from a personal point of view, giving advice to high net worth families, and just running down the list. I see use cases for being used as collateral in bonds, insurance policies. You've got, in the States, as we have here, we've got children's education funds where they make contributions to, effectively manage funds for a children's education. They can be used as collateral in mortgages. And what's really interesting, I think, that's something that hasn't really touched on is, from an annuity stream or a pension stream perspective in the long term, think about this. You can basically time lock a portion of your Bitcoin. If you had a Bitcoin, you could issue your Bitcoin out at 0.1 of a Bitcoin for the next 10 years to receive 0.1 of a Bitcoin in a wallet on your birthday every day for the next 10 years. All of a sudden, that's an incredibly powerful planning tool. And these are some of the considerations that we look at from a family perspective. And then obviously there are connotations with that time locking from an estate planning perspective too, that all of a sudden you can do things with this asset that you can't do with any other asset. And this is where the time locking brings up functionality that I look at that is really useful in our day-to-day, that can solve a whole host of problems for, families and effectively their legacy and leaving wealth to their children and their children's children. I'd just love to see it discussed more and become more mainstream, because I think the implications of it are huge.
Yeah, totally agree. On the topic of banks using Bitcoin as collateral, when do you think that might happen? Like, it seems like I agree with the way you phrased it. I agree that Bitcoin is a super collateral. I agree that at first it was difficult to see, but now I can see where banks would actually potentially pay you to use your Bitcoin as collateral so they can use it to create other loans and make money other ways through how they do today. When do you see that potentially happening, and like who might be a first mover to do something like this with Bitcoin as collateral?
That's a good question. I think if we look at the banking sector at the moment, and if you look at it, I think we may have already seen this, that, Michael Saylor took out a loan with Silvergate. he got 200 million from them. He put up Bitcoin as collateral. So, you know, he basically has already done a bank loan from a commercial lender. Sadly, that commercial lender is no longer. Um, Operation Choke Point in full effect. I shouldn't laugh about that, but you know, one wonders if there was some pushback from the banking sector that they actually did a bank loan. I think probably a better framing of the question is what happens, or when is it going to be mainstream? When are all the banks going to offer that? And I think there are some fringe banks who are doing it now, like Silvergate, and I don't know any others who are doing it, but um, I think within the next 5 years, 5 to 6 years, we're going to see banks across the board doing that. They're going to be leveraging off the Bitcoin companies at the moment who are doing it. Um, they're going to be using their systems and processes, their custody solutions to deliver that to their clients. And this is where that leads to, I think, an explosion in price because you look at the largest markets in the world, they're effectively derivatives markets for a reason. They're effectively a collateral market. And this is where Bitcoin being the best form of collateral, I think will underpin or can underpin, has the potential to underpin all of those markets and then be the best form of collateral. If that's the case, then the price of Bitcoin goes up exponentially. And this is one of the other reasons why, so bullish on Bitcoin that, once people understand, the nature of, collateral and the best form of collateral typically has the highest amount of value attributed to it. You know, if you look at, what's the largest asset class in the world right now, if you remove derivatives because that's a hodgepodge of, everything and by default, literally a derivative of what the asset is, it's global real estate. That's the largest form of asset on earth right now, and it's also no coincidence that it's the best form of collateral.
Yeah, that makes a lot of sense. Pretty mind blowing. And then when you start figuring out how much better collateral Bitcoin is, it could get pretty interesting.
Yeah, and so what is that? That's a $300 trillion market right now. So, you know, Bitcoin's sitting at a $500 million or $500 billion market cap. There's a lot of upside, and I just think it's hard not to be positive on Bitcoin with all of the metrics behind it. The only thing that hasn't really gone our way in the last, say, 12 to 18 months, maybe 2 years, is the price. But the price is a function of the health of the network. The health of the network's gotten substantially better than it was 18 months ago, and human psyche will pick up on that, and price will come back. So.
Yeah. Yeah, I mean it's honestly kind of scary thinking about the changes that we potentially could be about to witness, right? Like if Bitcoin is literally better collateral than real estate, and it's not just like marginally better collateral, it's like magnitudes better of collateral, then this
Yeah.
whole economic system, the whole financial system is, on the cusp of like crazy change. I don't know. So like what final thoughts do you have? I know we're kind of coming up on time. What final thoughts do you have for the audience on, the future of Bitcoin, future Bitcoin collateral and future, Bitcoin banking?
Well, I couldn't be more positive on Bitcoin. Um, I think whether you look at it as an individual asset, I'm really bullish on it. When you compare it on a relative basis to stocks, commodities, bonds, um, property, I mean, it's an absolute no-brainer to have 5 to 10% of your net assets in Bitcoin. It's a hedge outside the system. So wildly bullish on Bitcoin. All the metrics are going in the right direction, I believe. Um, from a form of collateral, I'm excited to think that this will be integrated into our traditional financial system, and to those people who think, oh, we want to be outside the system, it's like you do want to be outside the system, but you can't be outside the system until you're inside the system. And so this gets adopted into the financial markets and then actually outgrows that. So um, wildly bullish on Bitcoin as a form of collateral. We've never seen anything like it. As someone who's worked in credit for 10 to 15 years, I cannot express how much better this form of collateral is than anything else out there. And if we just take a sort of might take a brief moment to talk about credit. From a credit perspective, you look at the three C's of credit. It's basically credit. It's collateral, capacity, and character when you're lending money. Bitcoin as a form of collateral basically solves the other two C's because you don't need to worry about their character. You don't need to worry about their capacity. If they can't make payment on it, you just sell the asset instantly because it's liquid 24/7 all over the globe. So that changes everything. There's just a lot to be positive about, and I guess a final thought would be, please, whatever you do, cold store, self-custody your Bitcoin. Personally, I believe multi-sig collaborative custody is the best way I've seen to do that, to reduce your risk of losing your Bitcoin. And if anyone needs help with that, please reach out to me. So that's something I'm very passionate about. I want to see every Bitcoin off the exchange so we can see real price discovery of Bitcoin and ensure that the paper markets don't push around the price of Bitcoin in the spot market.
Yeah, I love it. Peter, thanks so much for coming on. Audience, definitely reach out to Peter. Obviously, he's a Bitcoin expert and he's a Bitcoin security, Bitcoin multi-sig expert. He can help you secure your Bitcoin with great peace of mind. So thanks so much, Peter, for coming on.